Hello, my name is Marie Parris and welcome to Property Summits, the team that connects, guides and educates you authentically throughout your property journey. So whether you're starting out for the first time or you wish to reset and broaden your experience, this is the team that you need to connect with. On my left we have Richard Bush, John Howard, and on my right we have Tony Gimple, Nicholas Wallwork and Paul Mahoney on live link from Australia. So guys, I want to kick off with the first question, and that's really about who do you think has suffered the most in the property market and will they recover? Nicholas, I'll go to you.
There's been a few casualties, I'd say. It's been quite a polarising market, hasn't it, this year? It's something that I've never experienced in my time. Although John might say I'm not old enough to have experienced many things, but you know, I've seen a recession or two. Well, I've seen one recession, and I've seen a COVID. To answer the question, I would say, you know, the student market, investment market has been hit pretty bad. A lot of uncertainty there. Home courses coming up, and I'm not quite sure where the state of it is at the moment with this second lockdown. I think people are going back next year, are they? Is anyone?
Yeah, I think so.
So hopefully it's kind of recovering next year. That obviously has a knock-on effect with stock into sort of HMO professional markets. So we've seen more competition in that market in our areas. So it's even more importance to be the best you can be. Yeah, I'd say.
How do you be the best that you can be in this sort of market?
Well, I think it's everything in the whole life cycle of the deal and the lets. We're fortunate enough to have owned and operated our own letting and management agency from day one. You know, we always had that in-house. So in the lockdowns when other agents were shut, landlords were left stranded with voids and no agents open. Obviously agents were able to stay open in the second lockdown, but ultimately we were able to operate under safe conditions and fill voids where others weren't able to. So that's one example where we were able to be better and to be more risk adverse by having different tools in our toolkit.
Good.
But yeah, I think it ripples through the whole life cycle really. You've got to be best, you know, right down to the furnishings and the look of the place, make it as best and clean and immaculate as it can be.
Right. And John, what would you say? What would you add to that?
Residentially, the residential property market has bounced back unbelievably well. You know, we've got 5 estate agents offices in Norfolk, and we're going to have a record year, which who would have thought that in lockdown, you know? We made cash available to the business in case it needed it, and it just hasn't needed it. It's been remarkable. Whether we'll need it next year, that's another matter. But at the moment, everything is very, very rosy. There's been a big pent-up demand. So residentially, no real problems at the moment. Commercially, my goodness, totally different setup. I've got 4 shops in Norwich, and not one landlord has gone back and opened up yet. I can't get hold of them. So that's an example. Luckily, they're only small shops, and we can weather the storm on those. But it's remarkable. You know, we can't get hold of the tenants at all. You know, and it's just quite remarkable. So I think commercially, big problems. London, massive problems going forward. So commercially, for me, is where it's really been difficult.
So what have you been doing as a commercial landlord? Have you been offering sort of rent payment holidays?
Well, I would if I could get hold of them. You know, I'm really struggling in the ones in Norwich. But on the whole, what we found is the bigger commercial tenants we've got some quite big tenants, well-known tenants, and they tried it on to start with and wrote to all their landlords and said, oh, we can't pay, we're not paying. And my advice has always been, ignore that because they're bigger than you are. So I've always ignored that and let all the other landlords panic and take rent, you know, discounts on the rents and so on. I've just I held my ground and said, no, you pay, and they have paid. Now they've paid maybe because some other landlords have not as hard as me and are, you know, a bit softer and kinder and helped them. The smaller tenants we've helped smaller tenants, but the big tenants, why should we? They're bigger than we are, so why should we? So we haven't done so.
That's a good gauge.
Richard, what would you add? Who's suffered? Who's suffered the most? So we've got students,
I agree with
commercial
John.
market.
I think the commercial market is probably what we're avoiding most now, and I think it's probably been hit the hardest. and it's uncertain what will happen in the future. There's two other sectors as well. I think short-term lets has been quite badly damaged by the lack of movement around, lack of travel, and also holiday lets. People that have holiday lets. But commercial, I think, is probably the areas that is going to be hardest to recover from this.
Okay, and Paul, do you have anything that you'd want to add to that?
Yeah, I suppose just to reiterate some of the points that were just said there by the others, from my own experience, we, in all of our wisdom, launched a short-term let business at the start of this year. Obviously not seeing COVID coming, and it's been difficult because the central city sort of short-term lets, where previously you had so many reasons for people to be travelling there, those reasons no longer existed. But that seems to be coming back a bit now, strangely, for whatever reason. We've got 15 units in central Birmingham that we've taken on. And we had 10 bookings over the weekend, which was the best we've had so far since we've taken on those units. So yeah, short-term let's been tough. That's resulted in a lot of people going back, taking stock that was being used as short-term lets and going back to ASTs. I know, speaking with a few agents in central London, that's certainly been the case. The rents have certainly come down in some areas because there's more stock available for rent. I think that there are certain areas that perhaps might struggle more sort of coming as we start to see the repercussions of what's happening at the moment, such as locations that might be hit by further job loss and things like that. But certainly the commercial market as well, with more and more people working from home, and that likely to continue. More businesses considering more flexible working options now, because it kind of makes sense for financially pretty much for anyone. Why send thousands of people back to central London 5 or 6 days a week when they can work from home 2 or 3 days a week and probably do just as good of a job? So, the commercial operators are going to have to rethink their business models, I think.
Definitely.
Yeah, I suppose the one abiding sector that suffered is any landlord, be it commercial, residential, who are overextended, overgeared. Yeah. If you're 75, 80, 90% on resi buy-to-lets or student lets or HMOs, and you've got unattractive deals, you've really, really suffered. All right, there haven't been huge amounts of repossessions yet. There have still been some arrears, and although the tenants in some cases have received help, the landlord sector as a whole has not. Now, whether that's political or whether it's because governments of all persuasion don't see the private rented sector as a legitimate business is another matter.
No, they need to, because it's
Absolutely
it's a massive part of the market, the private rental sector.
Yep.
There has been help though, Tony, because if you're running a small rental business, you would have had access to the bounce back loan. You would be able to. And a lot of landlords and developers have made use of that support.
Yeah, it's not as easy, particularly for property businesses in the buy-to-let. On the commercial side, a little bit easier.
Yeah, if you've got a limited company, it's a lot easier.
It's a lot easier, yeah.
But don't you think they're masking really? A lot of this is just been papering over the cracks. If there's a weakness in your chain, a recession will find it.
Yep.
And will punish you for it.
Yep.
Of course, over leverage is the one thing that everyone gets tempted into in a relatively strong market. Yes. And there's been banks lending 80-90% on commercial, which is totally bonkers in my view.
I'm jumping the gun a bit, but you're raising a point that is going to be very useful for anyone who's thinking about coming into the market. But if you need to leverage up to that amount and the banks are lending on that, what would you advise people to do otherwise? I mean,
Do a different deal.
Absolutely, do a different deal. Yeah, I understand that tenants and toilets really are hard work. It's not a get rich quick. It's not a panacea for all one's financial ills. There are a lot of people out there who see it as an answer to all of their problems getting into property, and it's not. You can oversaturate the market very, very quickly, And if people are borrowing with no previous experience, 85, 90, 95%, for rentals as opposed to development where you've got a relatively quick in and out, you could end up in trouble very quickly.
How can you saturate a market when there's the demand for it?
Well, okay, there's demand for the properties, but not necessarily the demand for people who are looking to get into it as landlords, either as rent to rent or property sources. If you like, looking at the marginal plays, the gaps, and there are a lot trying to come in who've got no previous experience, and you're getting. I see almost every day the same properties being offered by by 3 or 4 different people.
But you've got to start somewhere, though, haven't you? I mean, we all started with no experience, so where do you go from there? You've got to start somewhere. So
yeah, you have, but
One of the things we like to stress with property summits is that you treat your property portfolio like a business.
yes,
So coming in from the start, it's
Yeah.
a different game to 15 years ago. You can't just buy a few buy-to-lets and make a load of money, paint the walls, rent it out, and make a good return. Now you've got to really get your tax planning, your structure right.
Yeah.
You've got to get the right mortgage advice. The detail, the devil's in the detail now. You've got to get all those foundations far better to
Totally.
be able to succeed.
And as I always say, there's lots of ways of making money out of property. I've got friends who do lock-up garages, make an absolute fortune at lock-up garages. There's lots of different ways. You don't want to be tunnel vision. To start with, you want to look at the whole market and see what suits you. For some people, it's buy-to-lets, and they buy so many a year and you're pretty passive. Other people want to, lend money to people via crowdfunding, like Richard does, or invest with Nicholas or whatever. But they all need Tony for tax advice.
yes.
So property's like a big boat. If something goes wrong, like it is in London now, it does take time to slow down, turn around, and come the other way. There's no massive rush. And the one thing I found this year with people, advising people, is that they've all rushed to buy at auction. That's why the auction market's so hot at the moment. It's crazy. Everyone's rushed in. And I've said to everyone I'm helping, said, just sit back, relax.
Yeah.
This is a long job. This isn't a short in and out. Take your time. Still do your research, still get to know what's going on, but you don't need to jump in with everyone else.
You guys did your first live summit in February. I remember I was there. Did any of you see this coming?
There was news out, wasn't there? We heard about over in China cases, but we had no clue it was coming.
China weren't telling
so
the truth
quickly.
either, of course.
So there wasn't anything really that we could have done as investors, developers to sort of mitigate any loss.
There are some things that you can do to mitigate the risks of any potential negative impact on the market. We're talking about 2020 here and COVID and the impacts that that's had. But in a lot of ways, it's quite similar to the credit crunch and the dot-com bubble and things that have happened in the past and how that's flowed through to the property market. I think sort of tried and true fundamentals of what drives property and what gives us confidence of sustainability of demand, holds true throughout the current situation as much as it has in the past. And I think a great example of that is, for example, buy-to-let landlords. Some have struggled to collect rent over this year, given that there's been a ban on evictions and the government almost seeming to encourage people not to pay rent in some cases. Whereas, for example, my properties and the properties our clients generally invest in, being city centre, centrally located properties targeting young professionals, have, from what I've seen, been the ones that have performed the best from a rental perspective, because that type of tenant seems to be a bit more financially aware, and we haven't had issues collecting rent because of that. So, I think certain things like that the understanding what drives the rent, what drives supply and demand in property, and ticking all the right boxes gives you more confidence in performing well, not just in good times, but also surviving or even thriving through bad times.
But do you think, though, that the city tenants are going to want to come back and, you know, live in the city? A lot of people are thinking about, they don't want to do the city, they want to get out in the suburbs, have a garden.
I don't know, Marie, I don't necessarily agree with that. You know, coming from the perspective of, I suppose my preference, I live in Zone 2 London, obviously in Australia at the moment, but I live in Zone 2 London, and one of the reasons I live there is it's 10 minutes to my office in the city, but that's only one of the reasons. You know, I could move to Zone 4 or 5 London and probably get a property twice the size for the same price, but I like having bars, restaurants, gyms, cafes, you know, all the other things that living in that central location offer me. And I think in a way that's a bit of a, well, it's something that I've been talking about for a number of years, is a generational shift in preferences. You know, people in the past who were more family focused, had children earlier, got married earlier, wanted the bigger family home and were willing to commute to work for that. Young professionals want all those things on their doorstep. So there's a big shift in preference there. And I don't think that COVID's going to reverse that preference shift.
Anybody agree, disagree?
I don't like agreeing with Paul too often, although he's normally right because he's pretty bright. I said pretty bright, by the way. So I think, in principle, I agree with that. The younger people are going to want to be in the city centres where everything's happening and so on, and there's a lot of them. But they want quality accommodation. And this is where, you know, quality comes to a front. Okay, you may have got slightly less rent than you thought, but if it's quality, you'll let it. If it's quality, you'll sell it. If you're in a good area, you'll sell it. And the one thing to do when the market may be difficult in the future is always buy in the best areas you can afford. Because you know then, if there is a drop or a downturn, the area will save you. The area you're investing in will save you.
And it'll be the first to bounce back.
And the first to bounce back, absolutely.
Well, it depends how you define best, though.
The best area you can afford. But best area you can afford,
defining
Richard.
Best as in what way?
In your case, Mayfair.
John, you really need to define what you mean by the best area.
The best, in terms of residentially, the best roads, the best area of a town.
So
don't pick the
best
worst.
Transport links.
Yeah, don't pick the worst area. Pick the best area because you'll let it sooner. You might let it a bit less. You'll sell it easier. You'll sell it less.
Richard, I agree with your point there. But again, another thing I quite often talk about is not investing in locations that are heavily driven by one company or one industry, because that one company, one industry can very easily move away. You know, they don't care about your rental property, but you do. And therefore you want there to be multiple driving factors in that location, because that obviously provides, you know, more sustainability.
So you would define best, Paul, there by the sustainability of the local employment, whereas I think what John was defining as best, which is what I'm trying to understand, was really
best
more
residential area.
Yes, but define best, John. I understand the residential area, but
most expensive area.
The most expensive.
Yeah,
so
the most expensive you can afford.
I don't think that's necessarily the right
because it's safety.
strategy.
You know, you don't need to be brave in a market that's difficult, which I believe we'll talk about that later, probably another series or whatever, but about the market being more difficult next year and the year after, you need to go for safety.
But is the most
you don't want to go for risk, you want to go for safety.
It's the most expensive. You said, you joked with Richard about Mayfair. That's got to be one of the worst locations.
Yeah, that's a bad example in London maybe, but outside.
But if I'm in Reading and I pick the best area in Reading, that's going to be hit the worst as well.
Why?
Well, not necessarily.
I don't think so.
You know, London maybe it's its own market. You know, it tends to fall
London,
quicker
you can't
harder, but
judge market. You can't judge market.
You can't judge
like
market
London against
No,
anywhere else, any small town, pick the best area of that town.
I think we're talking about small town, not London.
Pick the best area of those towns.
Yeah, I agree.
Sorry, Tony, do go on.
The hard part is not the top end of the market or the bottom end of the market, it's the part in the middle. That's where it's hardest to make the right choices. On the one hand, at the very top end of the market, Mayfair, you've got a class of people who will never run out of money, rich beyond the dreams of avarice. The complete opposite of that, you've got people who are on universal credit, low paid, some kind of supported housing, and they're always going to need good quality accommodation, which in essence the state is subsidising.
Absolutely.
And that's just as successful as as at the very wealthy end, and in many ways a lot less aggravation.
And that type of landlord would not be suffering in this marketplace.
No.
Well, they're surely booming because if people are going unemployed, more people are moving to benefits. That's a booming
But it's
sector.
very different.
Yep.
With all
That could
due
be the worst
respect
area of town, couldn't it, John?
Yeah, but it's very different. We're talking about, if you're talking about buying, refurbishing and selling a property, or buying your own property, that's what I'm talking about.
Yeah, so homeowners. more so,
If you want to buy your own property,
Yeah,
or
yeah.
invest in 2 or 3 individual houses or properties, then you want to pick the best areas you can afford to, because they will go
Yeah.
up best of all. The very poor areas, if you're doing multiple, then that may be the case. But what you must remember, those capital growths in those poor areas will remain poor.
True. Yeah.
You'll get
it's yield-based only,
there's
isn't
a trade-off between income and capital growth.
Yeah.
In those areas, the perfect deal would be both, and that's very hard to find.
Okay.
Yeah.
Paul, did you want to add something there? Did I hear you say something?
Just one little comment. I'll just kind of add to that a little bit. I suppose from an investment perspective, just to add to what you were saying there, John, what we tend to look at the best, the slightly cheaper location next to the best location, because it offers a very similar amount of amenities, but it's cheaper and therefore the yields are better, and tends to increase in value, depending on the location, obviously, a bit better than the area that already has.
Yeah.
But slightly riskier.
Potentially slightly riskier, yeah.
So do you think that anybody in property is going to look back on this year and say, yep, I had a great year? I mean, you've just alluded to that in some of your businesses. What about?
For me, it's the year of opportunity.
It's the year of opportunity, yeah. You know, I'm getting calls pretty much every day, leads coming in every day. And a lot of people, despite what has happened, have had really good years. Capital growth hasn't been spectacular, but in certain markets, particularly in the lower end of the market, in places like Stoke, Nottingham, North East, rents, yields have been absolutely fantastic. They've had good years. They've had a good year, but the year of opportunity coming up, it's going to be
So would you
fantastic.
actually then be saying to investors, hold on, don't sell your properties? Because there are a lot of the smaller landlords who have 3 or 4 properties that are panicking, and they're thinking, I want to get out, but prices are going to really crash.
Don't panic. Don't
I
panic.
don't think they're going to crash, but I mean, we had £35 million worth of property to sell at the start of the year. COVID came, and I thought, oof, this could be a bit tricky.
How much of that have you sold?
But we've sold probably over half of that, I'd say. And I would have taken that at the start of the year before COVID. And I want to keep selling some of the stock, because it gives me capital to then reinvest when blood is on the street.
So you're waiting.
When blood is on the street. And it will happen in certain areas, not all areas. And I always take what Paul says. I've learnt from Paul. Micro market, some areas in the UK next year will go up. Some will stay the same. And as Richard and I have discussed earlier, having a coffee, which I didn't have to pay for, which was nice, for a change, Richard, they're going to go down. So
Let me put it to you. Put it on the line. What areas would you say that are going to be hardest hit?
Geographic, you mean?
Yes.
Yeah.
well, you've got to look at the areas where unemployment's going to be difficult. That's the first thing. So that's the basics, isn't it? It's, if anyone says that, this year COVID has cost this country 300 billion, if anybody thinks that won't have an effect on the economy, on unemployment, they've got to be bonkers, haven't they? Surely, goodness, okay, some businesses will thrive in an environment like that, and the property industry up to now has got away with it. If you're not commercial, you've got away with it. But you have to wonder going forward, and I said all along that it was the domestic market and the trading, dealing market are 2 very different things. The domestic market, I think next year, certainly in the county towns and things like that, I think it will be okay. But I've already picked up a distressed site in Birmingham. I've got 2 or 3 others I'm looking at, and I believe that next year, like I think most of us around this table, there will be opportunities. Now, the key is not to jump in too soon. Remember, it's a boat. It takes a long time to stop and turn, come the other way, property. So you don't need to be in a super rush.
So what's that timing for the boat to be turning back?
Well,
the
I
other
think
way?
the timing actually has gone back 6 or 9 months, because what's happened is the COVID, the loans and all this sort of thing have masked the problem, and the developers that were in trouble have got out of jail because the market's been so good.
Yes.
Now next year, don't
Temporary
forget,
get out of jail card.
Exactly. But next year, don't forget, the other thing they've got in their favour next year is we haven't built as many houses this year as we should have done because of COVID. So there will be a pent-up demand and supply going forward. So it's difficult. I think towards the end of next year now will be the time to really make hay while the sun shines. And the one way to know when is when the auction market starts to decline. Averagely, 73% of properties are sold at auction, get sold, hammer comes down on them. In a recession, that comes down to 50%.
Right.
So the barometer, the auction is the best barometer because it happens quickly and instantly, whereas the rest of the residential market takes time to catch
Just related back to what you said, Marie, smaller landlords thinking about getting out, don't, just because you're reading in the news there might be a crash in property prices. Property isn't about the short term. In my mind, that's one of the beauties of property, is that in a lot of ways, in a lot of cases, it saves us from ourselves. If people invest in stocks and shares, they see the value of their portfolio halves by 50%. They sell at the worst possible time. The market starts to do well again, and then they start buying again. So they're buying and selling at the worst possible time. Whereas property is a long-term thing. It's hard to buy. It's hard and expensive to buy. It's hard and expensive to sell. And therefore it should, so long as you're confident in the property and the location you invested in and all the reasons you've done that, you should just be holding on. Don't be thinking of selling because you're reading negative things in the media, because the media is often wrong as well. In fact, they're usually wrong when it comes to predicting things about the direction of the market.
Tony, I want to bring it on to you, and then I want the panel to sort of tell me what they think. We all agree that the Chancellor has got a real dilemma on his hands, because he's got to be able to keep the businesses and the jobs there, but he needs to make back this money.
Yep.
So do you think that he's going to clobber us second property owners with heavy capital gains tax in line with income tax rates?
There's a difference between second property owners and being a landlord. So the classic second property owner was somebody who has a holiday home or a home in the country. That's not the market we're talking to. We're talking about the private rental sector as a whole, all the way through from small scale social housing all the way up to maybe build to rent. So, as I'm fond of saying, the state protection racket has done its job. It's put its hand in its pocket. It's kept the economy going, and at some point, it has to balance the books.
What do you think he's going to do? Are you a betting man?
Sadly, yes, I am. And anybody who actually knows what a Chancellor's going to do is almost certainly going to take a hiding at the bookies. That said, there are certain things that were on the cards a long time before COVID. Things like dividend tax. Almost certainly that will come into line with income tax, because it is an income. The fact that one was taking a risk before is neither here nor there.
And if the regs have pushed us all into limited companies, that's what they want to do.
That's what they want to do anyway.
Tax.
Yeah, the bear trap, the George Osborne bear trap. Why incorporate? Capital gains tax, that does need a bit of a review, certainly. There have been abuses. Whether it should come in line with income tax, I don't know.
What would you suggest? What would you?
Brexit's
what
got
would be
something to do with
fair?
that, sure, isn't it?
Yeah, I'll come on to that if I may. It's the higher rates for treating long-term property investment as suddenly being subject to 28% as opposed to 18, that would be crazy. The state has to balance the books in due course. Will all of the taxes rise? That depends how well the economy does. John mentioned Brexit. It's probably the best thing that could happen for the UK economy in a lifetime or two.
Why?
Why? It will drive inward investment. It will drive outward investment. The UK is a maritime trading nation. It has been forever. Yes, it's got a checkered past. We were better at certain unpalatable things than anybody else. But the UK, well, it's true.
Yeah, okay. Tony, I'm just waiting for you to get to the point, yeah.
She's doing the Andrew Neil bit. Yes, go. Yeah. Is there an answer to the question in there? Yes, okay. People want to do business here. Why? Because effectively we'll have more free ports. It's going to almost be a free trade zone. We've always been more competitive, and as more money flows into UK coffers, then taxes won't have to rise as much. Whether it will be on CGT, whether it will be income tax, whether there'll be inflation, who really knows? But I suspect, looking at all of the chancellors we've seen in recent years, whatever persuasion, even if they can't make their minds up, which side of the divide they're on, this particular one will balance the books and will balance the economy. How he does that remains to be seen.
Richard, add anything to that?
To tax, I don't have a view on tax, to be perfectly frank. I think it's something that we can't predict. And so whatever the rules are, then you get advice from someone like Tony on how best to work within those rules. But I have no idea what's going to happen with capital gains tax or any other tax for that matter.
Okay.
I think from a Property Summit's point of view, from a collective point of view, we would say to people, make sure you're taking the best advice at the current time.
Yeah.
And that is all you can really do.
I've been getting asked a lot about the potential capital gains tax change. And I think this happens a lot with any type of investment when people are thinking about their money. They can kind of jump at shadows a little bit, and then they start thinking about making decisions based upon things that haven't even happened yet. So there's been mention of capital gains tax increasing, and whether that will apply to property, no one knows at this stage. So there's no need to start thinking about changing your strategy based upon what we don't know.
Let me come on to something else. Someone wants to start in property. They have some money. They may have some limited money, but they need some advice. What would you recommend?
Well, I think first and foremost, it's important to get all the low-hanging fruit of property education, and that's jumping onto all the online websites, forums, chat forums, Facebook groups, listen to every webinar. Jump on YouTube. There's a lot of good content on YouTube at the moment.
There's a lot of rubbish as well, isn't there?
There's a lot of rubbish, but it is tricky to, when you're starting out, to work out what's real and what's not.
How does one navigate themselves through that?
Who are the fake gurus in this world, and who are the genuine people that have got track record and experience? And I think if you've got a sensible head on you, you'll figure that out by watching everything and absorbing everything like a sponge. Certainly don't act until you feel you've got the right advice and you've got all that kind of low-hanging fruit. Read everyone's books that are out there. Anyone that's written a book in property, read it. It might not be gospel, don't get me wrong, but read it. Learn the industry, learn the ins and outs, and you'll soon be able to spot who are the sources to trust.
A newbie, how am I going to spot that? Break it down for me.
Well, you won't spot it immediately,
Don't give me sound bites. So how are we going to differentiate between you guys that are true, authentic, and the professionals to somebody who isn't? What does that look like to that person who's got the aspiration, they have a bit of money, and they feel, I want to go into this, because I do think things are different now than what they were 20 years ago. So how do we spot them?
Experience is the first thing. If you're taking advice from someone who's done one deal, or 2 deals or 3. It's ridiculous.
Does it
It's
matter about the
absolutely
amount of
ridiculous.
deals that you've done?
It's hugely important. Hugely important. The more experienced you are, the more you've seen recessions, you've seen what can go wrong, what to do right, what to do wrong. And someone who can advise you correctly should be able to stop you getting into the same problems and pitfalls they did probably themselves.
You made the mistakes.
Made the mistakes for you, so you don't need to make those mistakes. So, and by the way, you show me a property developer, investor that's never lost any money in property, and I'll show you a liar. Everybody has had a problem, but it's how you get out of those problems, how you deal with those problems, how you identify those problems before they happen even, is the difference. And what really, I'm very passionate about this because I see so many people, I speak to so many people who have had some dreadful advice from someone who's been in the business 5 minutes and thinks they're the experts because they've just done it. So people think just because someone's just done something and it's been a success, or may not have been, but they make out it is, that they're the people to go to.
Well, that's fraud, isn't it? That's a totally different thing.
Absolutely, they are the last people to go to because they've never experienced any downturns.
I'm going to sort of push you on this, or any of you that want to come in, because a lot of people do ask me about this, is that, look, I want to learn, but I don't know where to start because there is so much information, and I want you to break it down for our viewers.
So I think we live in a world now where if you go online and you do some digging, it's not easy, but if you do a little bit of digging, you can find out who's treated people well, who hasn't. Looking at one review isn't the right thing to be doing because you can't please everyone. But if you get a bit of an idea of what people are saying about different people in the industry and you watch some of their content, you're agreeing with Nick, you read their book, you digest what they're putting out there and decide, whose logic you most agree with. And also what works for you, because I don't think there is a one size fits all for what's right for a person, because, someone starting out in property, that could be somebody who has just sold a business for 5 million quid. And has all the money in the world, all the time and quite a bit of money to go off and do something with that money. What's right for that person is very different to the, full-time teacher who's got 30 grand to invest but no time. So I don't think there is a one roadmap for a new property investor, but I do think that people can determine on their own or by talking with people and through internet research who are the right people to deal with. And that is part of the reason we set up this panel.
I think there is one key question that you should be looking out for if you're a newbie. Yes, it's integrity, and that integrity can be manifested with one simple question. Why do you want to get into property in the first place? And if somebody comes to any of us, that's the first question that we're going to ask them. Why? What are you trying to achieve? What do you think it's going to do for you? And if they can't answer that, if they don't know why they want to do it, then actually, maybe now is not the time for you. And the other thing to look out for is that you're not being sold to come on the next course or the next deal. So there are a lot of firms out there who simply make money by selling the next course as opposed to the actual deals.
Just to add to that as well, Marie, I think then, as Paul said and as Nick said, there's lots of information available online and you can find lots of people to talk to. You'll have more information than you know what to do with. And this isn't a plug for my part of the industry, but one of the things that you can do now is try it before you buy it. So you can try a property investment strategy by supporting other landlords and other developers with investment and learn along the way before you jump in and do it yourself. And that isn't for everybody, but it does enable, it's a softer way in than to put up your 30K to buy your first buy-to-let in a town that you're not.
I think that's a really good point, Richard.
What makes a good developer then?
Well,
in a nutshell, 3 things.
Well,
without stating the
what
obvious.
I would say, a good developer is black or white. There's no grey areas. That's the first thing. So there's no shall we, shan't we? You define the deal, you know what you want to do, and you do it. You do it, and you do it to the letter. You don't start shilly-shallying around and change your mind. And
Point two.
Point two is finding the right deal, because finding the deal is very difficult with enough margin in it. And the other thing, and I find that this is where people struggle, is putting the deal together correctly in the correct manner and timing that suits the developer best. For instance, you might decide you want a 3-month delay completion to help get things in order. But to do that, you need to plan that from the start, not tell the vendor at the 11th hour, oh, we need 3 or 4, or whatever it might be. So you need to be, it's a bit like a game of chess. You want to be 3 or 4 moves ahead of where you're going to end up, and plan it. And structuring the deal to start with is where they all go wrong, a lot of people. And then they have to unravel it, and everyone loses confidence in them, and so on. So get it right from the start.
Yeah, and find your customer before you even start. Find your buyer.
Well, that's even better if you can do that.
Yeah,
not always easy.
Not always easy, but...
I agree with everything you said about that, but I think there's an important point to make so far as, talking about should I be a property developer, should I be a passive investor? Would you not say that to be a property developer, you need to be entrepreneurial?
To be a property developer, yes. To be an investor, no.
And would you also agree with me that most people shouldn't, or perhaps couldn't, be an entrepreneur or a business owner? Well, a lot of people, that just doesn't fit their personality or lifestyle.
I agree.
But I think Paul's point is really important, because whether you're going to be a landlord or a developer, if you're starting a property business, you're running it as a business, you are being an entrepreneur. It doesn't mean you're doing it for the first time, the true meaning of the word, but you are being, there is a risk involved, there's a commitment involved. And you asked what makes a good developer. What we look for when we're looking for developers to work with is we look for people who are not focused on the money. If people are focused purely on the money and not on their customer or the aesthetics of the building or other aspects of the development, but they're only focused on the money, then we never get involved with them, because it's not the motive. At the end of the day, you make profit from development because of what you created and sold, not because you were particularly clever with the money. So that's one of the things that we always look for.
Really good tip for people wanting to invest.
Yeah. As
to how bigger institutional style investors, what they might look for.
And also likability, because if you're investing in a joint venture or whatever, you want to make sure, we're just doing some joint ventures now, and I'm so keen to meet the person early on, not just the deal, because if we get on together well, then I'm willing to invest in their deal probably.
So what happens if it was a fabulous deal, but you just didn't get on with the person, the energy?
I would walk away.
You would
genuinely walk away, because
Nicholas,
there's going to be problems along the way. You're going to have a friction, and you don't want a friction. And I've been very fortunate in my career to work with some fantastic business partners I've had over the years, backers. And I can honestly say, even when things have gone wrong, and they do sometimes go wrong, I really never had a disagreement ever with them. And I've worked with them for 30, 35 years. And my business partner now is about to retire. He says he's had enough of me after 35 years, which took him that long, eh?
He's made his money and he's got out.
Exactly. Let's hope the next one lasts as long. So, it really is on the person. You've got to be able to gel and get on well. It doesn't mean you need to, by the way, be going out for dinner every night and holiday together. You don't want to be doing that. You just want to be respectful, respect them as a person, and like them as a person. You're not looking to go to nightclubs every night.
I think what's interesting, John, is that, talking about people, it's about sourcing the deal as well, because sourcing a deal is not just about the deal. It's finding the person that needs your solution. You want to create a win-win situation in any property deal. Maybe there's a distressed seller for whatever reason, so you want to make them an offer that solves their problem, keeps them happy, they got what they want, you get a little bit of a good deal, hopefully, and everyone wins. So it always comes down to people in this world. Business is just a collection of people.
Yes, indeed. I agree with that. So, last question. Has COVID made you reflect on your businesses differently, the way you do things within yourself individually? Paul, I'm going to come to you first on that. What has it done for you? Because, we're almost 9 months in, how have things changed? How have you changed things?
So I like getting asked this question with regards to, you know, has our approach to property changed because of COVID? And the reason I like getting asked the question is because it hasn't. And you know, I don't mean to sound smug in saying that, but you know, because we are generally quite conservative in our approach, certainly for our clients, when it comes to investing in property. We want to mitigate risk as much as we want to try to make some money out of it. And therefore, we tend to, you know, try to invest in, you know, big cities with depth in the market, really strong reasons people to want to live there, ticking all those sorts of boxes, and kind of generally avoiding sort of smaller, less sustainable locations.
Great. Tony,
Yeah.
has it changed your business? Have you changed?
Oh, it's busier than ever.
Okay.
Seriously, I mean, you know, if somebody would have said to me that 2020 with COVID would have seen, you know, my business boom, and I said, "You must be joking. Are you nuts or what?" I'm busier than ever. In fact, not only busier than I ever was, but despite the fact that I'm working from home. And thankfully, my wife and I can, you know, bear each other's company.
Well, we haven't had that. We've got
You're
your
enjoying
opinion on
it.
that, but we haven't got hers, have we?
Tony, you're enjoying it though, working from home.
Yeah, look, I'm a career sociopath, so I mean, it's really not a problem for me. No, my business has boomed.
Okay, Richard.
Has it changed us? Well, nothing fundamental. I think at the end of the day, we're an investment business, and so we rely on confidence. And for our investors to feel confident, they need clearer communication. So what we have been doing all the way throughout the COVID period, and we will do more going forwards, is more regular updates on how the projects are progressing, because there's so much uncertainty that the investors are concerned that things are not progressing. And actually that's worked in our favor because we've got closer to our investors and we get more feedback so we can improve our business more in the future. So we haven't changed fundamentally, but it has made us more aware of the feeling of uncertainty and how that undermines people's confidence to invest.
Yes. John,
Overheads.
same question.
Overheads. It sharpened everyone's pencils, I think, during the lockdown. Why am I spending this money? Why am I doing this? Why are we doing that? You know, why is... And of course, property-wise, people have sat at home and said, what the hell are we doing sitting here? Why don't we... What we were going to do 5 years' time, why don't we do now? And that's why there's been a boom in the property, because people are moving. And I've got friends in lots of different businesses, which is surprising to think a property developer has friends, but I'm told they're my friends. And what's clear is that they've all looked at their businesses and said, why do we need all these staff? Why do we need this? Why do we need that? Sadly, in some cases, they've reduced their staff by quite a lot and not made any difference to their business because they've done it smarter, being more clever how they've done it. And that's very sad for the people who've lost their jobs. But of course, a lot of these businesses that were making money anyway are suddenly making an awful lot more money because they've taken so much slack out of their business.
It's more leaner.
And they're leaner and they're making a lot more profit.
And they will grow and they'll re-employ. You know,
And they will grow and they will
temporary...
re-employ. But actually, any recession, any slight weather recession, well, officially we're in a recession, aren't we? Any recession, people evaluate their businesses and think, crikey, we just better be a bit careful here. And that's what they've done. And that's what I've done.
Nicholas, last word to you.
Yeah, I mean, the guys have covered a lot of stuff there. I mean, fundamentally, our business hasn't changed. You know, John's phrase of sharpening our pencils, we've done that. We've reduced some overheads. Interestingly, we're still spending the same budget on marketing because we believe that's important. I think in recession, one of the first things that people think they should sharpen their budget on is marketing.
And that's
it's
the
actually
last problem.
quite the opposite. You need to spend more on marketing to make sure you're there in the forefront doing that business that maybe other people have stopped marketing. So there's more business to be had. So that would be one sort of bit of advice I'll give people out there from a business perspective. We've kind of improved our letting process. You know, we've looked at all the processes to make them more efficient. We brought on
Is that because you
staff.
had more time, Nicholas, during the recession, during the lockdown?
I have had
to
less
do so?
time as I say, like similar sentiment around the room. We're busier than ever. We've got more customers. We've got more opportunity coming up. So we're sharpening our pencil in terms of preparing our development pipeline for early next year. There's some good deals coming up. And yeah, excited to be doing business in 2021 is the theme, really.
Excellent. So there we have it. We're out of time. We hope that you've enjoyed watching Property Summits as much as we've enjoyed sharing our expertise with you. Until next time, when we're speaking about looking ahead for 2021, we will see you then. Goodbye. Look at that,